Hello. Okay, thanks for the wait. I am back. And yeah, today is just going to be a very chill live stream. I'm just going to be looking for my next stock pitch for continuous compounding my Substack. And so, yeah, I'm going to go through a couple sources today for idea gen. A couple ideas I have is since we've already done a lot of Japanese company handbook stuff, I'm thinking of using, I can go on, for example, the screener on Koyfin, right? That's one. We can also look at, there's publications, like stock analysis compilation. That's a really good newsletter. If you guys aren't subscribed to, highly recommended. You guys, for you guys, I think every week they post about what are the top hedge fund ideas, what are the top, stock ideas, and they cover, different geographies, U.S., Japan, Europe. So it's a great resource. So yeah, today, yeah, I'm gonna go through different sources for idea gen, and then hopefully I can find something that's interesting. Yeah, and then yeah, I could also rank some of the ideas that I go through on a tier list as well. I think that would be interesting, and potentially this could turn into a post as well. So yeah, let's without further ado, let's continue. Take a look at the recent stock. Now let's come. The most recent one is August 8th. Let's see. Hedge fund, hedge fund, hedge fund, and then okay. Cool. So let's see. Okay, so I'll look at Japan first, and then okay, so Dungeon Investing. Me and Dungeon Investing actually wrote a stock pitch on For You before. We collabed on that one because my gap is I don't. Dungeon Investing does a lot of game related stocks, some that are in Japan, right? And I'm self-admittedly not much of a gamer myself. I like to play poker, but then that doesn't have you don't need superior graphics to play poker, right? So yeah, highly recommend you guys look at Dungeon Investing if you guys are interested in investing in any stocks that are have anything to do with games. Let's say. So Cyber Agent. So the stock has been a hundred bagger since 2003, 10 times since its IPO. So Cyber Agent has a internet advertisement agency business and it diversified into gaming and media. Interesting. So it has a substantial increase in operating profits. Right. So this is the company that has a game called Uma Musume. I believe it's like the dirt. Yeah, it's called Pretty Derby. So it's essentially it's like horse racing, but instead of horse racing, it's literally it's literally like it's like girls in like JK or whatever, like schoolgirl outfits, and then and then you give them buffers and then buffs, and then they race against each other. So it's basically it's pretty degenerate, I would say. And the reason why I can see this being successful is because you know horse racing is pretty popular in Asian countries. Um, and so it's not a and then if you combine people who are into anime and then you combine the degenerate activity of horse racing together, you get this basically. Yeah. So, yeah, and apparently this one is the thing about Uma Musume is that they created an English version, I believe this year. The Japanese version has been out for a while. Initial release date, yeah, 2021, but they created a English version in 2025, and it's gotten a lot of traction, right? And I think it's gained a lot of traction because of anime fans, because I think it was streamed a lot on YouTube, for example, or on Twitch, where people would play this game, and yeah, it definitely gained a lot of traction, and especially if you're an anime fan, like a lot of people would probably enjoy this type of thing. Um, yeah. So it seems like, yeah, their game is starting to pay off. There's probably some gacha component to this game, if I were to predict. I actually have it downloaded on my phone, but I didn't really. I just got through like the trial stage. I never really got too far. I played it for like maybe 2 hours, to get through the intro stage, and haven't really played too much. But there's probably in-app purchases. I can imagine, like these girls have different outfits. You can probably pay for some outfits, some skins. You can probably pay for special characters, right? And there's probably tons of gacha components um, for the stuff. The media and IP segment is no longer a drag, being profitable in 4 of the last 5 quarters. Let's take a look at 4751. Let's take a look at the trade description. See what okay, other descriptions. Okay, it's engaged in media business. It operates media, internet advertising, game investment, consultation, and other segments. The company operates Amoeba, a video streaming platform with various channels, including 24-hour news, dramas, romance shows, animes, and sports, and win tickets for online betting for sports such as horse racing and bike. Oh wow, okay. Talk about a gateway drug, right? Like, get people to play your, um, horse racing game that's probably free to play, but then have some premium gacha components to it. And then if you get addicted to the horse racing, you actually go, maybe. Um, Merchandising and overseas marketing also offers AI solutions, creative production, DX business, research and consulting, smartphone games. In addition, the company engages in news and content planning and production, creative office planning and management, advertising, venture capital. Okay. So take a look at the profitability, because I have no concept of how profitable they are right now. Oh wow, okay. So, okay, not that great. Pretty low actually. It could be for a couple of reasons. It could be because they've been actively investing into their businesses to turn them profitable. How's their last few quarters? How's their last few quarters been? Let's see. 4751, right? Hmm. Hmm. That's interesting. Well, do they have revenue growth? Let's see. Last 12 annual. Okay, I see. So they've had quite a bit of revenue growth. So with this company, it could be similar to like an Amazon business model where they spend a lot of money on R&D, hiring people to bolster their businesses, and that way they have less income, and that way they pay less taxes, but their actual revenue potential, their profit potential is a lot higher. potentially. 40 billion yen on 27 times PE. Interesting. It traded really low before. 100 in net cash. What's their cash here? Okay, still 100. Now they're 900. So more than double, almost double. Let's take a look at their share price. Oh, gone up a lot. From 1100 up, probably around 700. Up like 60 something percent. I remember in one of my live streams, I looked at it probably around this range, probably in the 1500 range. So it's actually gone up since I looked at it in the live stream. Yeah, so pretty low profitability, but then I wonder what the justification is. They have a football team. I think I've heard of Grand Blue Fantasy, never really played it. Shadowverse, I think I've heard of it, never played it. Wow, so revenue increased 70% and operating profit tripled. So it just seems like they're investing heavily in the Abima, but then it's not really paying off that well. Which is their, I believe that is their video streaming platform, streaming service. Yeah. Okay, so the management doesn't care about the profits, but cares about increasing the value of the business over time. That could make valuing the company a little bit more difficult. So it'd be more like a sum of parts things, and you have to be looking at TAM and looking at market potential. Sports betting being legalized in Japan, I I don't see that being anything that's going to happen in the near term. Dungeon Invest says in media having a free user base and being the gateway to betting related content like sports, which puts them in a fantastic position should sports betting be legalized in Japan, and gaming expanding the capacity of the group to be able to act both as a contractor and work on their own IPs with different types of games at the same time to increase the value and engagement for each IP. So sports betting, in my opinion, won't get legalized in Japan yet. And if it does, it's going to take some time. Primarily because the only thing that you can gamble on right now is pachinko. I don't know if they have lotteries. Maybe they have lotteries, but you don't get actual casinos in Japan until 2030 when they have the integrated resorts. So we will see based off of how the Japanese population deals with the integrated resort. If the government thinks, hey, there's a lot of problematic gambling going on because of these integrated resorts, then that's going to make sports betting nearly impossible. If we think that, hey, it is manageable, we are getting significant tax dollars from this, and we aren't seeing that many, problematic gambling going on, then that could be a green flag for sports betting in Japan. But I don't see that. That's a we're in 2025 now. Integrated resorts coming online in 2030, earliest 2029. So that's a 5 to 6 year runway. So that's too far away to look at. Internet advertising. This should be pretty good business, honestly. 5% operating margin. Hmm. It's weird that their sales and internet advertising consistently has gone up, but then the operating profit portion it does not follow that same trend because it should be scalable. It's weird. Yeah. So yeah, Dungeon Cyber Agent's online advertisement business has handled ever increasing volumes, but has not produced ever increasing profits. Margins have been declining since the late 2010s, but volume increases made up for it for a long time, with profits peaking in 2022. Since then, margins declined more sharply, going from around 8.5% to 5%, being even below 5 in 2023. That is not surprising. The services they offer, inventory buying, optimization, performance marketing, and affiliate marketing network, have become heavily commoditized. And while they're sorry, I'm just going to read this in order to figure out what it is that's making the margins low. What I don't understand is the way we live in the age of AI. I don't understand how margins are not scaling if you have more volume. I get it if the unit price of like it says that the services they offer have been heavily commoditized, probably leading to some pricing pressure. But hmm, oh, okay, this is a red flag for me. So Dungeon Invest says that there is a major risk area. Um, March, so there's an investigation going on in accounting practices for Cyber Owl as a subsidiary dedicated to affiliate marketing. Was announced, and a few weeks later, the reports came in. The subsidiary has been inflating revenue and receivables and doing it more and more every year, from paltry 40 million Japanese yen to the 1.75 billion JPY in 2024, a very relevant amount and almost 10% of the operating profits of the segment. Um, yeah, that affects the trust of the company. Okay, declined in value temporarily, March 26. Hmm. Also provides a window into how hard pressed the business has been even in the last few quarters. This is really bad for management. If I can't trust management, then it's like, oh, yikes! That is very questionable for me. Yeah, if I can't trust the business to report numbers, then why am I investing? That. Okay, let's quickly look at what is the biggest points he has for the investment case. Um, okay, so let's see what he writes here. There's no, there is no real mention of what like a price target is. He does say the cyber agent has a formerly unprofitable business turning around in media and new releases going better than expected. Mobile side, both businesses have significant operating leverage, and I don't think the price takes into account how big the effect of new games releases. Let me take a look if there's any. Uh, Yeah, I think for me this would be in the too hard pile. Because number one, I lack circle of competence. Number two, I don't because there's some accounting fraud in one small area of the business. That leads to somewhat lack of trust. I mean, you could say, yeah, this is going to be an outright success. Sales are going to skyrocket, and then because of that, operating margins are going to skyrocket. Oh, it did increase a lot. Holy shit. Quarterly OP 15. So if we can keep it 15, it can reach 60. So 51 generates 15. That is interesting, actually. 30% operating profit margins. Yeah, I don't. I don't have a concept. I'm not confident enough because it does trade at a pretty high multiple, honestly. Yeah, pretty high multiple. Okay, next. That was interesting. Next, Mitsubishi Electric. Take a look at this. Okay, let's see. When your customer is AWS, your Lyft data center cooling profit 55% year over year, yet the shares still trade at only 1 times book. Interesting. Okay. Why look at Mitsubishi Electric right now? Exploding AI and cloud demand, liquid and high density DC cooling is moving from niche to mainstream. Global DC floor space is expected to, I think DC means data center, probably. Global DC floor space is expected to grow at 30% CAGR through 2030, but power density is rising even faster. Interesting. Okay. Hidden inside a conglomerate, the air conditioning and home products segment where DC cooling lives is less than 12% of consolidated revenue, so its momentum is partly lost in the group averages. Operating profit turnaround. Operating profit for the aircon segment jumped 55% year over year to roughly 0.3 billion US, 50.1 billion, on only 6% revenue growth, thanks to a mix shift of higher margin DC cooling solutions. Strategic build-up. Alliance between MEPPI, MEHITS, create a global DC cooling franchise. Recent demos includes two-phase direct chip cooling in live data centers. Interesting. What does the company actually sell to data centers? So let's see. It says critical precision cooling approach, DX and chilled water room units, less than 200 kilowatt racks. 90% of installed base incremental upgrades. So this is a completely new thing for me. I need to learn as I go here, which is fun. Let's quickly take a look at the financial. Oh, they break it down. Adapt City multi VRF to white space heat loads, rear door heat exchangers up to 30 kilowatts, die level refrigerant evaporation, captures 35 to 45 degree waste heat for district loops. Okay, I don't know much of what I just read here. Recent financials. Important to interpret every metric in light of Mitsubishi's current market cap of 49 billion. Revenues increased 5% and operating profit increased 19%. That's really good. Cash flows increased 18%, also very good. That's fine. Net cash is 3.7 billion. What is their valuation, buddy? Okay, so they have a share buyback program, which is nice, for 4% of float. 50 yen per share of dividends. What is their stock price? What is stock? 6503. Okay, this has piqued my interest. What do their stock look like? Stock has gone up quite a bit since the low of April. It's gone up roughly 50%. Hello, Fernando. Welcome. Thanks for being the first one to engage in the comment section. how have you been? Okay, let's see. Profitability. Let's see. So, margins have been climbing. Okay, so mid-single digit margins. Gross profit sits around 28 to 30%, high of 32. SG&A margin has gone up, which isn't surprising because labor costs have gone up in Japan. Maintain mid-single digit net income margins. Interesting how net income margin is still this high when there's not much EBIT margin. So potentially they have a lot of cash with generating investment income. Let's see. So yes, they do have a lot of cash. Let's see here. So that's roughly 350 billion. Oh, 7.3 billion company. Oh wow, market cap gone up. Yeah, market cap went up a lot. 350. So doesn't not a huge difference. So still 7 billion enterprise value roughly. Let's see. EBIT, P. What's multiple look like? So because this is electric company, so probably utility, so it does trade at higher multiples because it's perceived as more stable. Okay, Fernando says busy days with baby. Currently out your stream on the big screen while babysitting. Hope everything's good wherever you are. Yeah, things are great. Things are great. Um, Taking care of the baby. Nice, nice. Oh, are you in the like the living room and then you're watching me stream on your TV? I'm very honored. I'm very honored to be um, to command such attention from you. Yeah. Oh, okay. Let's see. So those have high multiples. Let's take a look at revenue real quick. How has the company grown? Let's see. So 5.5 billion. What is it on an annual basis? So steady grower. Now up to 5.5. So increase roughly another 5% revenue growth. Okay, so I'm curious what the angle here is because the multiples are quite high. 50 yen per share, so that is, and that's like 1 point something percent. It's not really high. So dividend yield isn't that high. Okay, valuation, base case, stay the course. Aircon and home books 8% CAGR of revenue, 9% margin, operating profit of 75 million. Apply 15 times pure average of 1.1 trillion. Oh wow, 1.1 trillion implied value, or 4,050 shares, 16% upside. 75. Sorry, what is the operating margin? 75 billion yen. But it's 7.3 trillion right now. Okay. DC cooling re-rating. If high density and liquid cooling push segment profit margin to 12% and street grants a 20 times multiple implied value of 1.6 trillion. Conglomerate discount 0.9 times book. Oh yeah, what is our book value? That is interesting. Wait, but the price has gone up then. When was this released? Hold on. When was this released? Fair value is 6,000 yen. Wait, what's our book value? August 2nd is when this was released. Let's see. August 2nd. 3,300. Okay, so AF said, will you research Mitsubishi Land? Okay, what is the ticker, AF? Mitsubishi, I can type it out, I guess. Wait, before I move on to that. This is currently not my circle of confidence. The multiples seem kind of high. So we're looking at a few angles here based off of that. I mean, I haven't been completely persuaded by the case of this person. It's probably because I lack knowledge in actually what's going on. So I don't really know what the segments are and then how much each is producing. So it's kind of hard for me to actually exactly pinpoint whether what this person says is, you know, accurate or not. So, yeah, moving on. Okay, so a request from AF for Mitsubishi Land. I'll take a look at that. Did I type Mitsubishi correct? Mitsubishi. Heavy. Mitsubishi Land. Paper Mills? 8802. Okay. Estate. Okay, cool. Okay, also increased quite a bit. So up again, up roughly 50%, 45 to 50% around there. So Mitsubishi Estate engaged in real estate activity in Japan and internationally. The company develops, leases, manages, and sells office buildings and commercial facilities, operates rental offices, co-working, virtual offices, hourly meeting rooms, home deliveries, storage service, commercial nursing homes, and building garages. Offers real estate management. Okay, this is probably really okay. So it's 3.8 trillion market cap. Sizable. Also engages in construction, sales management, and leasing and development of condos, design and contract construction of custom-built homes, renovation, sales of condos. Okay. Okay, a lot of stuff. A lot of stuff going on here. Okay. Let's take a look. AF, any reason why you want me to look at this company? Is there an investment angle you have? Any? What's the TLDR reason why this is a or you don't, maybe this is a new company you never looked at either, but what's the reason why you think this is worth looking into? Okay, ooh, very nice margins. I like these margins. These are great margins. Nice, not bad. So low teens net income margins. Operating profit in the 20% range, 18 to 20% range, which I like. Okay, so AF says the investment case is the recovery of office leasing market in Japan. I like that, yes, because during COVID, a lot of people work from home, but you know, you can correct me if I'm wrong. I think Japan is more traditional in their business practices. I think a lot of people prefer, or at least managers probably, you know, want to force people to work at the office than work from home. I'm not saying whether, you know, that's good or bad. I'm just saying that it's more of the case. Oh wow. So, whoa, this is interesting. So they have 3.4 billion in debt. So that's like 3.1. Add on 3.8, 3.1, 7.9. Sorry, 6.9 enterprise value roughly. So what's it look like? The most prime location in Tokyo. Okay, so they probably have the most prime location. Well, they have pretty large market cap, so it wouldn't surprise me that they own some pretty nice prime real estate in Tokyo. Okay, so Sicily growing revenues. Now it's at 1.5. What's the most recent quarter? 1.5 into 1.6. Okay, Sicily growing revs. That's good. Operating income of 156 billion, just 278. Almost doubled that in 2023. What's LTM? So 290 something is the record. Okay, now they have 326. Okay, okay. Okay, some quarters over 300 already, so cool. 300 on 1.6. Okay, just shy of 20%. Around 20%. expense. Which is only, they can definitely cover it. They definitely can cover that. It's okay. Wow. Yeah, this is a scenario where it's beneficial to have a lot of debt because they generate enough income or high margin income where they can pay it off. So leveraging in this scenario, leveraging cheap debt is very good. So I would not mind playing a high multiple on a PE basis or something like this because the leverage is just yeah is going through leverage, right? So interesting. What is their 41, just over 1%. Okay, so the high multiple on this is definitely justified. Interesting. Not what I usually look at because this is a pretty large cap company, but going to look into this further. AF, do you know if you know what based off the market rate of their real estate, what the actual difference is in relation to the book value? What is recorded? Whether if there's that investment angle. Nice. So they have an English version. So I love. Yeah, that's the thing about larger market cap companies is that they can do foreign investor a solid and actually pay for higher quality translations. So yeah, I'm gonna quickly draft. This is 8802. 8802. Price of book is fairly valid one. Very nice. Okay, let's see. I think someone shot me a DM. See who this might be. Okay, never mind. All good. Do you have normal financials? Yes, they do. Okay, it's getting dim where I'm at, so I'm going to turn on the light real quick. Give me a sec. Okay. AO2, company is Mitsubishi Estate. Last quarter, I believe this is Q1. Q1, yes. Q1 of fiscal year 2025. Date of August. Ooh. Share price was around 30 something. 3158. Shares outstanding 1 million. Excuse me. Okay, almost 4 trillion market cap. What is the dividend? Let's see, 46. We have a new higher dividend now. 1.5%. What is their what? What? What the hell, man? I want the balance sheet. You don't have balance sheet attached to that? Really? Financial highlights summary. Summary of financial. What? What? Okay. One sec. That is kind of dumb. That is kind of dumb. You went to the trouble of providing this much data, yet you don't have the, what else is in here? Do we have... Okay, I guess they do. But like... March 31st. Wait, hold on. What is... So IR data... This looks... I don't know if this is... This doesn't seem... I don't think these are not Q1 numbers. I need to probably, yeah, I have to use the Japanese side probably to get it. Let me just double check. IR library, IR news. Look at IR news. Maybe. What? Okay, it just links me that shit. Okay, I give up. I look at Japanese side. Are they also that vague on this side here? No, they actually have 10 pages. Okay, so I'm gonna quickly download this. 8802. All right, we have it. June 30th, 81, 505. These are in millions of yen. Should be fine, yeah. Securities, 8762. Real estate for sale, no, that would not be included. Real estate for sale in progress. Wow, 500 billion in progress. Development real estate, equity investment. Equity investment. I need to double check that one. The Japanese translation of that one properly to determine if I include that or not. Mm-hmm. Investment securities 394060. Long-term loans are fine. Depositing guarantees we do not count. Those are fine. Okay, let's open up the Japanese filing. And then we look at this one. Let me just double check with ChatGPT what this one actually means. Shares of subsidiaries, shares of affiliates. Hmm. Hmm. Why is it short term though? Yeah, why is it short term? Like if you invest in a subsidiary, you're gonna get it back. Okay, so then okay. It's not usually in current assets. So the way that we look at that then is let's take a look if historically they've had that balance. Receivables, inventory, long-term investments. And quickly check on Buffett code. See if I can figure it out. What I'm trying to figure out essentially is are they liquidating that portion, or is that just consistently like that? Is it consistent? Do we consistently have that? So 962, 716. Why is it growing but then also consistently in current assets? That is very strange to me. Is it liquid? Yeah, I'm not understanding. They expect liquidity. This makes things rather interesting. Hey, AF, do you know how to interpret that? I don't know if you're paying attention to the stream or if you're even in the stream right now. But equity investment. Do you know anything about what this line item really involves and whether I should investment in J REITs? Oh, okay. So you would factor this into valuation then. You would factor this in then. 6-1, 5. That's interesting. Very interesting. Okay, so price to book is 1.5 times. That's technically not the right calculation because this is net of NCI, but let's see what their forecast is for the company. Okay, hopefully they have a more comprehensive. No, still 2 pages. Okay, this is fine. This is fine. We can do this. 7% ROE. Okay, let's look at Japanese version. Okay, I'm gonna quickly download this and also convert it. Cool. Let me grab a hoodie real quick. Okay. Gain on amortization of negative goodwill. Okay, so that means they bought a company for below its fair value, and they recognize that as profit. So reconciling it in the cash flow statement. I think that's what it means. That's interesting. Okay. Yep, that's it. Okay, where do we see it going? That's a lot of capex. Interesting. What is analyst estimates here? Let's see. Most analyst revenue estimate? Not as high. Let's take a look at the revenue growth. I'm just thinking about the thesis for this company. Before I do that, I'm going to take a look at the revenue segments. Wow, a lot of businesses here. Okay, let's see here. So, okay. I think it should be commercial real estate probably. Is that in English? A commercial property, okay, okay. I just look at this one. This one's easier. Commercial property, Marunouchi property business, Marunouchi, residential business, international business, investment management. Oh, investment management too. Hmm. Quite the revenue breakdown because there isn't any. Okay, let's take a look at the IR real quick. Actually, I would like to look at the fiscal year one first, and then look at the quarterly. I want to get a better sense of this company, what they do. What I don't get is why their ROE is so. The ROE is so low when their margin is so damn high. they're on their way to achieve 10% ROE. Progressive dividend payment of +3 for every year until 2030. Oh, interesting. So 5 years they would add roughly 15, so 61. 61 on. Well, that's not. Company trades at. So up to 2%. Yeah. 100 million buyback. Wait, so there's no revenue breakdown. How come? There's operating profit breakdown. How about revenue? I see. So they're in the business of holding on to these assets, building them, owning them, and then renting them out, and using debt to finance it, which is why the ROE is so low. Hmm. Okay, so if I were to spend an extra 50 minutes to get the most bang out of my buck out of my time, it would be I have to look at what are the vacancy rates. Right, so if the thesis of office being true, then we should see some gap in vacancy rates. And if there's a fill in vacancy rates, then that would be good. Or it could also come from some re-rating in the valuation of office spaces. If we think that because they own prime Japanese Tokyo locations, that if the cap rate, people are willing to pay more um, for these properties, and that could help as well because that would revalue the current portfolio. Oh, NOI is 7%. Hmm. Capital gains. Development, leasing, and property management. Vacancy rate is only 1.7%, so not really high. There's not a huge gap in it though. incentive. $400 million. Still trading 20 times. Sorry, 400 would be 15 times. And then 10 times market cap. And then if we think about from the perspective of no pat, then around 400 turns into around 280, and this around 13, 14 times, 14 times PE, or price over no pat. I would say that this seems pretty safe, but not like super undervalued if it is undervalued. It's not like greatly undervalued. That's what it feels like. To me, at least. And it's not like they're buying back a whole bunch of shares. It's not like they're buying. Well, they do have a lot of debt, so. Just seems like a stable compounder, probably. Yeah. So a very simple valuation we can do is literally, okay, so like 2030, they're going to be at 2030, right? They're going to be at, they mentioned around 400, right? So if you think about that from a net income perspective, we can say like that times 0.7, 280. You know, let's include investment. Sure. Like that. Ignore that. Oops, I definitely did not. So if the idea is they consistently are valued at P of 20, right, then we can say 20, 5.6. %, over 5 years. Percent over year, every year, and then you get, what's the div yield right now? Div yield right now you get is 1.5%. Yeah, so I would say, yeah, this is just like, you could call it low risk. You know, a predictable compounder, I guess, but not like really high margin. Like, yeah, it's a large cap stock. I mean, I don't know what to say. Yeah, and you have 1.5% dividend. So you CAGR 7% and generate, yeah, so decent return. Decent return. If that is true. And then if you can say like, hey, I think I believe management is being too conservative, right? Like we think that, hey, people are going back to office, so there's higher demand. Higher demand means they can increase the price. So they're at 1.75% vacancy. So because there's more demand for office space or more office space, and they can charge a higher price. So then revenues increase at the same margin level, right? Or margins expand, right? So let's say, what would that look like? Yeah, okay. And then you add 1.5% div yield, right, on top of that price, and then they're gonna increase dividend by some amount every single year, right? Until I think they said 3 yen or something like that every year for 5 years. So it goes up to 61, right? So then, next year is you're looking at, well, let's say the penultimate year is 2%. Okay. So then you're looking at around 12%. So you start off at let's say 11.5, and you get up to 12. Pretty good, right? If that's if you want some diversification, you want to diversify the risk. I think that's not bad, right? Cool. Yeah. Obviously, I don't know enough about the company, honestly. Like, yeah, very preliminary, but yeah. Buyback. So there's some probably improvement. 100 billion though on a. So let's say they do 100 billion every year. This is so for 5 years, 500. What's 100 uplift on this though? 38 is 1%. 3%. Interesting. Interesting. But then the price would probably increase every single year. But I got 3.9 divided by 100 million. Oh, 100 million. Wait, hold on. This is 4 trillion, bro. So even if they did 100 billion, okay, no, that's sizable. 100 billion, that is sizable. So you're looking at another. So if we go back, let's just go back to the base case. Let's just base case scenario. So it's around, also another 2 to 3% uplift then. So you get around like 1.5 from dividends, and then 2 to 3% from buybacks. So then you're looking at a 3.5. So in a base case scenario, around 10%, right? And if things get more positive, right? Looking at about 13%, 13, 14%. Not bad. Not bad. Bad. Is this what I'm usually looking for? Probably not. But, as a part of a diversified strategy, I think this is a good idea. Not bad. Reduce strategic shareholdings. Cool. Additional buybacks from it. Cool. And then they have how many long-term investments? They have, okay, so they have 400 billion. So that will last them 4 years. That's cool. Yeah, and then because of the amount of buybacks that they do every single year, the share price is going to be just very stable. Going to be very stable. So yeah, not bad. Like it. What would be my rating for this? I'm rating anywhere between, see, I don't have conviction right now, but it feels anywhere between B to A minus, somewhere around there. Yeah. All right. Well, thank you, Aya, for that. Hopefully that was helpful. Not sure if that was helpful. Yes, currency risk. But then, what is their exposure to outside? International asset. I guess they are building stuff. They are developing too, right? So weak yen, yeah, weak yen would make their purchasing power lower. So then procurement of raw materials is going to be disadvantaged. Ah, I see. So, hmm. Do we know why their international asset base went from 89 and dropped to 51? So they built something and sold it? Maybe a less than optimally performing asset, maybe? And now they're rebuilding it back up. Interesting. Why don't they just keep the asset? Is some combo of rental profit, some combo of sales of assets, some combo of condos. Yeah, because what you said wouldn't affect them as much if they were able to diversify more internationally, which is taking place, but slowly, slowly. 45, 96, 4. Yeah, so mainly still from. It's gonna take a while for that to even happen. Okay, let's see what the other. None. No Japanese stocks. Wow. Wow, wow, wee, wow. Okay. None again. What is going on? Ah, okay. Alta Cap. Let's take a look. Alta Cap typically hits stuff that I like. Okay, so Tokyo Automatic Machinery 6360 devalue NanoCap with improving shareholder returns, 0.4 times price of book, 7.8 times P. I like that. The company's targeting 1 times book price of book, committed to 30% payout ratio, plus upside packaging business and can expand margins and have plus investments of 5,220 yen versus share price of 2,885. Nice, cool. And then usually what happens is when Alpha Cap talks about a stock, usually it goes up sometimes. Uh, so 6360. Oops, 6360. July. Yes, it's gone up 500, so around 20%. What? No, no. Oh, this is really small. Yeah. So maybe it's the size of the company that's making it. Unless I didn't pay for Koyfin. I mean, let's double check. I mean, that doesn't show, but this shows, the number's fine. Oh shit. Okay, maybe. Oh, what? . Okay, let's try 6360 again because although it was a $5 billion company. Okay. Tokyo Automatic Fair. Okay, so this looks really nice. So stock price of 285. Currently, it's trading at 3260. End cap plus investment value of 5,220. Market cap 4 billion. Book value per share 6,700. Let's say. Price of book is 0.4 times. P last 1 month is 3 times, and then so it had a really great year. And then next year is going to be 8 times, around there. Dividend 100 yen. So around, well, currently it's 3,200, so around just under 3.3%. Company has 2 core businesses: packaging machines and soft production lines for soft contact lens factories, almost all of which are supplied to long-term partner Johnson & Johnson Vision overseas. TAM also provides, okay, so there's customer concentration risk there. TAM also provides engineering, maintenance, and spare parts services. Founded in 1955 and listed in 1966. Okay, TLDR is sentence pitch. TAM is just another dirt cheap profitable net trading at 0.4 times, but the real cost management's new willingness to lift capital returns and target a 1 times PE. Nice. The customer concentration is a risk, but the bet here is shareholder returns will improve further. Upside to this figure, which values the business and other assets at 0, is nearly 90%. Valuable rental real estate. The corporate head office is located on a prime corner in Chiyoda, 485 square meters of land. The company's own appraisal of it is 1.6 billion, with its carrying amount of 1.1 billion. This seems conservative. This is a prime location, 2-minute walk of Akihabara Station and 1 minute to something other station. Most of the value is derived from rental income from the ground floor, which is rented by large convenience store chain ownership. This property is not essential to the business, and it would be easy to sell for a big profit. Adding the appraisal value of this single property to NCAV is 125% upside. That's a total cumulative. Okay. So 1.6 plus this would be 6.8. 6.8. Sorry. Fuck. Because we don't have in billions. This is share price. Okay, whatever. Improved shareholder return. On February 7th, the company released a document highlighting their goals to comply with the TSE push for improved corporate governance, announced a dividend payout ratio. Going forward will be 30%, which resulted in their dividend jumping from 80. Okay, so it went from 10% to 30%, jumping from 80 to 240. So 240 and 3,200, I think. Oh. So that's like a 4% dividend. Yeah, that's really good. Wait, hold on. No. That's like a 6-7%. Yeah, that's like a 6-7% dividend. Was feeding baby TLDR of Mitsubishi Estate estable dividend instead of having a stash in the bank at 2.8%? Yeah, so the TLDR of that, I mean, you could review, but the TLDR of that is if the management forecast is true, if it is able to attain a 400 billion yen operating profit, right, and then it increases its dividend by 3 yen per year up until 2030. By 2030, you'll get a roughly 2%. Right, currently it's 45, and in every year they add 3 yen. Or was that 46? Sorry, 46. So every year they add 3 yen. In 5 years, that's 15 yen. So that's 61 yen. So you go from 1.5 to that. So you get that, and then there's also a uplift from their 100 billion yen buyback, right? Which is if every year they buy back that much, right? That is think about that impact, right? They're buying back 2.5% of the market cap every year, right? So there's some uplift from that. Is it actually 2.5% return? That's hard to say, but you can do a napkin evaluation that's probably around there, right? So you get 1.5 from that, and then you get 2.5, let's say, or you could say 2%. Let's say 3.5 to 4%, just from better corporate governance, and then the was because this company is highly levered. This PE trades at high double-digit multiples, but because it's leveraged and it's able to pay for the debt and it's able to pay down the debt, what naturally happens in these type of scenarios is that over time, as they continue to borrow more and to buy more, and then because they borrow more to buy more properties and it increases the return, what happens is it still maintains this type of PE level after let's say 5 years, for example, right? So then so this is a very positive. So positive state is 450 billion of operating income. But in this scenario, let's say what the management forecast is 400 billion yen, right? So you get around 7% return CAGR over time, and then you get around, let's say, it's 3 to 4% uplift from dividends plus share buybacks. So you're looking around, a solid, 10% return. Yeah. So that's TLDR. Would you rather have? Again, this company has a lot of debt, and as AF mentioned, it is subject to currency risk, right? So depending how much cash you have, then I wouldn't put all your cash into this company, right? But there could be a position. I wouldn't mind it being in one small starter position, right? Put $3,200 into it, right? I think that should be fine. Not investment advice. Seek investment advice from a financial advisor. What would I do if I had extra cash? And I would still look for better opportunities in this. There's probably some dividend compounders that are, in my opinion, that should be pretty damn safe. But yeah, if you want real estate exposure, this could be it. This could be the real estate exposure. This is fine. This is fine. But I haven't looked at other other real estate companies in Japan, so I'm not exactly sure, right? If there's a better setup than this, but yeah. Will you research REITs? MAAUS. That's a US stock? Yeah. I know how to look at them. It's just I haven't looked at them in a while, so I need to polish up on my skills in terms of REITs, to be honest. Mid-America apartment communities. It's interesting. Oh, wow. Wow. What is the div yield on this? 4%. Full cycle. Southeast, southwest, and mid-Atlantic regions. Because basically the entire region of fucking, yeah, almost most of it. Okay, the lower region. Okay. Wow, they own a lot of apartments. Yeah, the way you look at them is just look at their NOI. Look at the NAV of their asset portfolio. You have to look at also the real estate industry data. You know, what are the new builds? How much is coming online? What does the supply look like? It's not something I can really do on stream in a fast and easy fashion, I would say. Um, I consider doing that in the future, for sure. Yeah. Where was I? Oh, 240 on the stock price of that. So like it's pretty damn high. So it's 31. Sorry, this one. The other one was 6360. 3240. So it's looking at 240, 1360. 7%. That's really good. Really good. Hmm. Nice. Yeah, so no one really owns a major share of the company, so this is good. Um, Interesting. So they have customer concentration risk, but because this company has consistently used bespoke systems from TAM, so switching costs are high. But I have no real conviction on whether this, you know, don't know too much about this company. Yeah, so the investment for this one would probably just be some starter position. I would not do a very concentrated position in this type of stock because you are it bridges on the company reallocating assets in a manner that improves shareholder return, which is through dividends and buybacks and that kind of stuff. But usually, you know, in Japan, like this is part of a basket position. This is not something you concentrate in. But it's good, good pitch, good pitch. Yeah. Okay. I think I will end the live stream here for now. Probably the next one will not be looking at other people's stock pitches. It will be just me going on like Koyfin and doing some stock screener work. But yeah, it's been 2 hours. Thanks for Fernando AF for participating. Yeah, I'll see you guys in the next one. And yeah, if you guys have any other companies you want me to look at, feel free to DM me in the chat next time. Yeah. All right. Have a great weekend, you guys. Peace.